Googie, mate, times are weird.
Mark, extremely weird.
You know, now we've got wars, we've got crazy, inflation projections. We've got markets putting pressure on us, telling us there's going to be 2, 3, 4 rate rises and hold for a long time. People predicting recessions, unemployment increasing, or an unemployment recession, which is usually the most worrying type of recession. What do we make of all this, mate?
I think we've got to start from the fact that there's a lot of bad news. Let's not sugarcoat this. Inflation is high, it's too high, and it's going higher. So you're getting a bad situation, which economies go into, but it's getting worse. And your response to that is unpleasant medicine. I think it's fair to say that, okay, economies often have bad luck, and the oil shock, again, it's outside the control of central banks around the world, including our own RBA. So that oil price at $105, $110 a barrel, is a problem for the world. Now, that doesn't mean you put your head in the sand and pretend it isn't happening. It is. So what do you do about it? The question is, what do you do about it? Because shit happens occasionally.
Yep.
And
it's happened.
And it's happened. Hence, you sort of think, well, we'll put aside the budget for a minute because the budget's still, 2 weeks away roughly?
Scary.
So we'll see what Jim Chalmers, the Treasurer, does on the 12th of May. But in the meantime, we've got the RBA, Monetary Policy Board, meeting next week. And they've got this dilemma where the 9 very sensible people around the board table will be discussing, should we put rates up to tackle inflation? Well, if that's the only thing, you'd say unambiguously yes. And then there'll probably be someone from the other side of the table saying, well, hang on, the economy's slowing down. Consumer sentiment's fallen through the floor. Business confidence is down the gurgler. That is a precursor to higher unemployment. So maybe we should hold. And then the person on the other side will say, well, that means inflation will be higher for longer. And the other person means, well, that's going to be unemployment's higher for longer. So you've got this, I've called it a Sophie's Choice, that tragic movie from, the 90s or whatever it was, where that choice is an impossible one.
Or dual agendas.
Well, yeah.
The unemployment versus inflation number. I keep going back, Cookie, to, one of the great heroes of Australian Treasury is Paul Keating.
Yeah.
He's not my colour of politics, but it doesn't matter. Okay. One of the great treasurers of all time. Yeah. And, Costello was too, but one of the great ones was Keating during the 90s. And, he called it, mate, as it is. This is the recession we had to have. Now, I don't know, and I've been saying for a long time, I just think this was an ideological experiment. Can we keep unemployment low? Or more importantly, what is low unemployment? Is it 4.3 or 2, whatever, or is it should it be some other number? And can we control inflation at the same time? Now, Keating called it the recession we had to have, and that recession resulted in unemployment, as you recall.
Got to 11%.
11%.
11%.
And I would never want to see that, right? Yeah. I would never want to see that. No. But if it got to 4.75% and it allowed us for the bad period to last for a short amount of time, I would rather have that sort of medicine than just keep trying to, have a high inflation for a long period of time, have high interest rates for a long period of time, and then have unemployment lower. That's my trade-off. I don't know. Maybe I'm too old school, whatever it is, but I know that's the new approach of the board. Because it's not their approach; it's the approach they've been told to take under the new mandate.
Correct.
And no choice.
And I'm with you that I don't like a recession. I remember a recession. In fact, I was just chatting to a few of your team before we came in here to record this, who were very young. That they weren't even born in the recession. And I was just saying to them that recessions are bad. There's mass business failures. In the early 90s, Westpac was almost insolvent.
I remember that.
I'm sure, yes.
David Morgan,
yep.
Under all sorts of pressure.
Bob Joss and those sort of people.
Bob
really
left.
Going back in history here, mate. 11% unemployment. It was horrible.
Interest rates of 17%.
It was shocking.
Yeah.
We don't want to repeat that. So I guess my answer to that is, can we get by with just a little bit of pain? The bottom line, it's going to be adjusting to this problem will be painful for the economy. Get used to it. It's just the degree of pain that's got to be inflicted on the economy.
But can you do that, Cookie? Can you be like that?
Fine-tune it like that?
Yeah, can you fine-tune it? Because, I mean, are we trying to be too idealistic?
Question.
I mean, I'd love to see that. I mean, you know, the experiment, which sort of in June last year, July last year was, what was it? Unemployment was 4.2 or 4.1, and the inflation number was, what, 2 something?
Yeah, 2.6, I think, 2.7, 2.7.
Pretty good.
The headline was 2,
yeah,
2.1 or 2.0 or something like that. Yeah,
and then the
trend mean was 2.7, I think was.
Yeah, and that's sort of, everybody was cheering and high-fiving themselves and saying, wow, that's unbelievable. But like, it didn't last very long. It lasted like 3 months or something.
Yep.
So, do you think it's possible, mate? I mean, like Warren Hogan would not agree with that. Joy obviously doesn't agree with it.
Yes.
I'm now getting towards I'm sort of veering towards their view, which is the American view, which was the New Zealand view, which was a lot of other
Canadians hiked like crazy.
Yeah.
The Kiwis, yes, they hiked to 5 point something.
Much higher than us.
Went back to the low 4s.
Yeah.
Look, I think the way of tackling that is to sort of think about how the economy can adjust and whether there's this ability to get that inflation rate lower. Why I think I'm getting concerned now, and you know me, I've been sort of, they don't need to hike too much or hike at all even, you know, thinking back 2 years ago.
Yeah.
And that was wrong. You know. But just as I've been preparing for our chat this morning, I've got a few little bits and bobs in my wonderful data set. There's things that are just causing me to think, hang on, this is not just oil and a petrol price shock.
No.
There's something else sort of bubbling beneath the surface of inflation, and it's bubbling up. Things like Seek do a wages survey on the growth in the advertised wages on their website for jobs. It did slow down a little bit in the middle of last year when we had inflation and the Goldilocks for 5 seconds. It's now going back up.
Wow.
Purchasing Managers Index, that the PMI, they do ask about people, and the NAB survey, they do ask about businesses' input costs, straight up.
Wow.
Their expected selling prices, straight up. That response in a survey is tomorrow's inflation rate. That lift in wages is something that the firms will try to recoup by putting up their prices to maintain their margins. If I'm paying an extra 5% on my wages bill as opposed to 3.5%, well, either I'm going to have to sack people, recession, or I'm going to have to put my prices to cover that cost. Inflation.
Higher interest rates.
And higher interest rates. And that's the dilemma. So I'm seeing signs that inflation issue is more than just petrol. It is more than petrol now, that there's something else brewing in the economy. And coming back to your point about unemployment rate and with wages, because one way you can tell that the labour market is too tight, that unemployment is too low, is if wages start picking up.
Which is what Michelle Bullock's been worried about all the time.
She's been chatting about that ever since she's been governor, and her predecessor, Phil Lowe, was speaking about it for years and years. Again, I'm not quite really ready to sort of say that it's definitive, but the leading indicators of wages growth are turning up just when the economy is turning down. And that's
scary.
That's pretty frightening and a real policy dilemma. That's the issue. It's a dilemma. What do you do about it?
Yeah. So, do you think the Reserve Bank, they will think about policy, or do you think the Reserve Bank is going to think about the data and they're just going to have to act?
I think they just have to act and be open about it too. No pussyfooting around.
Yeah, totally.
Just so that press conference possibly, or a speech sometime thereafter, that the governor, it has to be the governor too, not the deputy. It's got to be Michelle Bullock, the governor of the Reserve Bank of Australia, has got to come out and say, yeah, this is the response we have to have because inflation, partly domestically, partly globally, acknowledge the oil price. Yep, it's happening. Should get a bit of an excuse or a bit of coverage by saying some of it's global. But just sort of say that this dilemma is something we're confronting and we've got to tackle it, and we've got to tackle it through higher interest rates and not apologise to the population, people with a mortgage, people with an overdraft, people with big business loans and all the rest of it, but to say this, unfortunately, is what we've got to do.
Do you think that part of the issue, and I don't know if anyone's unpicked this, I'm sure the Reserve Bank has, but part of the issue is that there is too small a number of people with a mortgage, albeit bigger mortgages than we've ever had before, relative to, say, what was occurring in the 90s. And then there's too large an amount of people relative to the 90s, again, if I go back to that period as a proxy, who don't have a mortgage, who own their home, but also now have big chunks of superannuation, which they never had in the 90s.
Correct.
This only introduced in the 90s.
Yeah.
And, people, let's call it over 55.
Yep.
Feeling, and so when the, merchant puts his or her prices up, they go, well, I'm earning more money on money deposit.
My term deposit's gone to 5 point something.
Yeah, I'm killing it. And I don't have a mortgage anymore. My house has gone up by,
10% compound for the last.
Well, compound, correct.
For the last decade and a half.
Since 2020, like 70%.
Yeah.
So my $1 million house is now worth, $2 million.
Yeah.
I've been paying my mortgage off. So my mortgage has gone from $500,000 down to $200,000.
Yeah.
Or zero.
Yep.
I've got $2 million there. I've got another $1 million in my super.
Yep.
Well, I don't care if interest rates go. In fact, I'm quite happy about it.
That is actually a fantastic point. That is a really telling point, that the composition of debt, so the debt structure, who's got it, how big it is relative to assets. That's the other part, as you're seeing with super. A lot of people who are now 50 years plus, who have had 30 years of super.
Yeah.
It started in the early 90s. So the first 10 years of super, you got a little bit of a growth. It wasn't big enough. Now, if you've had your money in a super fund for 30 years and you've earned average weekly earnings even, you've got a pretty decent nest egg there.
Yeah, totally.
And if you bought your house...
tax-free.
Correct.
Yeah.
And you've got your own little house somewhere other that you bought for 250 grand somewhere, it's now worth $1 million even, something like that. I'm going over 30 years or 35 years or something like that. You're actually sitting pretty, whereas back in the day it wasn't the case. Everyone had a mortgage, or a higher proportion of people had a mortgage.
They did.
And so it comes down to a point that we've discussed in the past. Are interest rates and is monetary policy the effective way of dealing with an inflation shock?
Well, the answer.
I do know the answer. Or do we need to sort of lean on our friends in Canberra?
Well, you know the answer.
Our friends in Canberra say, hey, Canberra and Treasury people and Treasurer, we've got to make sure that what your contribution is to economic growth has got to be pared back. And that can be done through either spending and or taxes or a little bit of both or whatever.
Immigration.
Well, immigration's high. It's coming down a bit. So I'm less worried about immigration than Chris was earlier. But it's really, and this is where the budget's so important. The NDIS discussion of a week ago, that was a big cut in the NDIS from the government.
We'll see if it happens.
It blew out.
Yeah, but mate, they're talking about over the next 5, I think it's 2028 or something. I'm worried about what's going to happen in the next 12 months.
Yeah. But the bottom line is, we've discussed this, you need to do something on budget policy, taxing and spending now to take some of the heat off inflation. I won't say heat out of the economy because the economy is not hot.
Yeah.
It's taking heat out of inflation.
Yeah, that is the ability for merchants to put their price up and the propensity for us to pay it.
Yeah, because if the price of something goes up and think that's too high, I'm not going to buy it.
Yeah.
That's exactly how monetary policy should work.
Yeah.
So if someone puts their price up, and because I'm, got a big pay rise the other day and my house has doubled in value.
It means nothing because it's only one individual. So, but multiplied by 20 million, whatever the number is. So like one individual, if his coffee's gone from $3.95 to $4.50, he says, I'm only having one coffee a day. What's an extra 60 cents when I'm getting paid more wages? Yeah. I don't feel like making it at home. It's not a big enough hit. And no one actually, because of these things, phones, mobile, tap and go. Yeah. We're not sitting there saying, hang on, I've got no money left in my pocket.
I've got to go to the ATM and pull some cash out to pay for that.
Correct.
Even for that coffee that's $5.
This brings it on. I mean, I really think this has a big part of the
price of cash.
Because okay. And people aren't looking at their bank balance every time they do it.
No.
They're not doing it.
So so you've touched on a number of really important things, and they do suggest that monetary policy today is less effective than it was in days gone by.
Say in the 90s.
So you got to hike.
What worries you? You got to hike more.
Sorry, a rate hike and cut decisions impact a smaller proportion of our economy in a much more extreme way than it did 30 years ago. Because there's a lot of people there that they don't care whether rates go up or down, really.
Yeah.
They go down a bit. Oh, my term deposit's going to go up. Oh, it goes up a bit. Yeah, so you're quite right about that. But the effectiveness is really honing in on such a small part. And that's where you hear people rightly, I'm not being critical at all, I'll say screaming that this is hurting so badly.
Yeah.
Whereas other people think, well, what are you worried about, And they're the people who did the right thing. They've got a couple of kids. They've got a mortgage. They bought a house 5 years ago. They bought it when rates were 2%, mortgage rates, this is 2%, and they're now 6%, whatever. And they're sort of thinking, God, what have I done wrong? And they haven't done anything wrong.
Yeah.
Whereas people who, 30 years ago, they paid off their house, they've got their $1 million in super, they're thinking, well.
Look, I actually think there's a large dose of unfairness in all this because let's say we go back to 2020. Let's say we go back to maybe July 2020, which is when the interest rates went down to 2%. Now, the whole objective of doing that at the Reserve Bank side is to encourage people to borrow money and for banks to lend money. And the government helped them lend money, by the way. The government gave them the banks the money to live. So I'm encouraging one of the boys outside to borrow the money. I'm the government. Go and borrow, it's cheap. He buys a property. Then we, the government, say, hang on, someone in our marketplace is spending too much money. Probably not you, the borrower, someone else. We're going to put interest rates. So we're going to put interest rates up to 6%. You say, wait a minute, I had nothing to do with that. I'm the person spending the money.
Yeah.
Why am I paying for someone else's spending habits?
That's the issue. There's no.
I don't understand. What's the answer to that question?
That because
what do you think? What is the answer? I mean, like.
Well, again, it can be. Again, I'll just mention because external shocks. The COVID pandemic was an external shock. The petrol price thing is an external shock. There's nothing to do with Australia.
Yeah, but the internal reduction.
But the implications for us are huge, though, because we are suffering from that.
Yeah, but the government encouraged people to borrow money at 2%. Well, the Reserve Bank did.
Years ago. Yes. No, they did. The term funding facility and all that stuff.
The term funding. So you can. That's what
you borrow money for nothing, basically.
And
the banks still had their net interest margin 200 basis points because they paid nothing.
Yeah.
Lent it to you and me for 2%, or someone for 2%.
Well, the bank's got a 0.1%.
Lent it for 2%.
For 3 years. Fixed. Fixed. Not variable, but fixed. So the banks and the government is all going, well, we'll lend you the money, no problem. And by the way, that pushed the house prices up. House prices increased. So I paid more because I could afford to pay more because I could afford to borrow more. So, I mean, if we look at the whole loop on this, Steve, it's not just the Reserve Bank putting the rates down to encourage people to make it more affordable, but the result of putting the rates down, I can tell you, I know what happens. The moment the rates go down, people can borrow more. So we didn't take it from 6% to 5.5. We took it from 6% to 2%. So all of a sudden, your borrowing capacity, because I assess you on 2%. When I lend you money, I assess you on 2% plus a threshold, but it's the same threshold then as it is now. So all of a sudden, I can lend you large amounts more. Now, because I can lend you large amounts more, you'll say, okay, well, that's not my money. I'm borrowing. I'll spend it.
Buy a nicer house.
So I I pay more money for the same house. So, I'm serious. Like right at the beginning, you might be able to buy a nice house, but the market restructures and catches up so fast, it's ridiculous. It's like weeks, especially in this country. So, because we don't have much for sale because we weren't producing much.
Yeah, correct.
So the house, so I borrowed too much.
Housing.
So now all of a sudden I said, well, Mark, you borrowed too much.
Yeah.
Now they adjust the rates back the other way, and now not only did I borrow too much, but my repayments are going to hurt me, and they're going to stay here now for a couple of years, not because of the way I behaved, not because of my spending.
Yeah.
So you're right. Monetary policy has been called a blunt instrument. Now I call it an unfair instrument.
Yeah.
And financial policy or fiscal policy, which has always been designed to work hand in hand with monetary policy.
Ideally, it should be, yes.
That's how it should work.
Too right.
So what would you suggest fiscal policy should be looking at today?
Fiscal policy in the budget, they need,
outside, let's say outside the budget.
It's got to be.
What about some tax breaks?
Well, there's got to be a combination of different things. Well, I think the first one, and I'll say it's the easier one, is cut government spending. Just cut it, We've had, you mentioned Paul Keating before. I remember the 86 or 87 budget. I can't remember which year. When he was Treasurer, Banana Republic. Australia was heading for a Banana Republic.
His words again.
Check your economic history, everybody. Mid-1980s.
He called us the Banana Republic.
And he had, against, this is a Labor government, Labor Treasurer.
Bob Hawke was the Prime Minister.
Yep, and he had 3 years in a row. I look back at the budget papers now in awe at that period, because in the back of the budget papers, sorry to be boring, there's this table that goes from 1970 to 2030 in terms of budget numbers. There are 3 years in a row, the only 3 years in that, 60 years of Australian economic budget history, there were cuts in real government spending in 3 consecutive years. No other government's done it. Costello didn't do it. Swan didn't do it. John Howard, when he was Treasurer back in the 70s, didn't do it. No one's done it, except for Paul Keating. And that was the response to a high inflation rate. Back in the 80s, inflation was 7, 8, 9%. So it was shocking. It was a real problem. And Australia was getting smashed from, really weak commodity prices and these sort of things. So Keating, to his wisdom, just said, I'll paraphrase, probably not actually, stuff it. I've just got to put the budget in a position where we run budget surpluses. We're going to cut a whole lot of programs. I'm sorry, some tough love. Like tough love to your kids, love your kids desperately, but sometimes, mate, you can't have that extra.
It's not on.
That extra paddle pop. You've already had 3 of them, whatever the case may be, paddle pops. But maybe that's not the right example. But, so Keating was saying some tough love for the economy, and it worked. It worked because that was that led into that.
The recession
we had to have. It led into inflation because Australia had 20 years of inflation, 7, 8, 9, 10, 15% sometimes. My God, 15% inflation. From 91 through to the pandemic, we had inflation between 2 and 3% consistently.
On average.
They hit the target for basically 30 years.
We were the envy of the world.
It was fantastic.
Yeah. And we had...
And I think that had a lot to do with that cuts in real government spending. The size of government shrunk. We had budget surpluses and all the rest of it. Fantastic. Now, to do that today is possible. We saw it with the NDIS, that announcement. Let's assume that they deliver. Let's assume that they deliver those. Instead of 10% growth in disability funding, it's down to 2% out to 2030 or whatever it is, whatever. That's a pretty substantial cut. If they can do similar, maybe not quite as big a magnitude, but even half that way on spending on things that are just too expensive, that are putting too much cash into it. And when I mention these things, people say, you can't cut defence. Well, maybe you can. Or trim it. I'm not saying we don't have it zero. We need defence. It's a really important part of our economy. Or healthcare, Medicare. What's on the pharmaceutical benefits scheme? That's expensive. Now, we need cheap medicines for people who are sick. Of course we do. We need Medicare, people to access Medicare when they're crook. Of course. But can we think of a way, and they're the big ticket items in any budget.
The care economy.
Yep, and I hate this, and I'm just canvassing this. It's not necessarily. I have to think about this.
No, but the care economy has become a huge part.
Huge part of that government. The budget numbers that come out next week, a week after next, on the 12th of May, they'll have government spending per year of about $750 billion. So if you can trim 2%, you're saving $15 billion a year. So just cut a couple of percent off some of these programs. Maybe, again, so when I say health and education and aged care and all these things, I'm not a mean sort of savage bastard, I'm talking about perhaps just unwinding some of the very generous conditions that we have with them. And it even mentioned it could be temporary. We just need to get this inflation rate down. We need to be tough. Reserve Bank does its bit. We're doing our bit in the government sector, in the budget sector. Yep, we're going to have a really crappy 2026 as a result of that. But hopefully by 2027, maybe a little bit longer, it takes a while for these things to work. Inflation comes down. There might be some resolution to the oil shock. In the global economy might be a little bit better. Then all of a sudden we'll sort of think, thank God we've taken our medicine. We're in the recovery room and we're starting to look a little bit better. I'm confident that sort of advice is coming from some people. It's just a matter, and it's not just Jim Chalmers,
it's political will,
it's the whole cabinet say, yes, mate, we're going to cut.
Yeah, because Jim can't just cut.
No, he's got to get all the cabinet.
He's got to go to every minister.
Yeah.
So
the finance minister.
I'm going to cut into your.
I'm going to cut your pet project.
Yeah, you can't spend that money anymore. All of a sudden,
I'm going to cut 2% off it.
And that particular minister will say, wait a minute,
instead of $1 billion, I'm only going to give you 980
and that person will say, well, hang on, that's going to affect my constituency, or that's going to affect my chance of re-election, or whatever the case may be. Yeah. And it's a really tough one. And we do have a big care economy in this country, and it's great. Yeah,
the question is, can we expensive?
Can we afford it? That's my issue. Like, we're not 50 million people where we're getting taxed from 50 million people.
And the other thing too, this is the other thing that will get me into trouble with everybody. So I've probably offended everybody on this podcast, Mark. Hike taxes. Now, I say that with a huge degree of caution. And we've had this conversation before about the GST, lifting it, broadening the base, using the revenue partly to take money out of the economy, but you can cut income tax and cut company tax rates, scales, if you do that. Are there other tax breaks on superannuation, which is very generous at the moment? Negative gearing, all those sort of things are in the mix. I don't know. I haven't heard the latest rumour. I'll have to check the newspapers later. But there's rumours going on. Here we are 2 weeks from the budget. So I think the government's sort of working it out.
They test them out.
They test them out. They fly the flag. We've got a lot of negativity. We won't put that in the budget.
Yeah.
So, mate, at the end of the day, I'll take a step back. I would cut spending in real terms. So in real inflation adjustment terms, it's down. I would probably tweak some of the tax system to make it a little bit less generous in the areas where it's very generous. The Reserve Bank would hike interest rates. And I would change, this is the other thing which doesn't cost a lot of money, it's rules and regulations, red tape, compliance issues. They're trying it in the building industry.
Mate.
It's sort of like,
You should look at my industry, financial services.
Yeah.
It's out of control.
Yeah. So there's more people employed in compliance than there are in anything else. Yeah. Compliance costs are huge.
And the people per person is very expensive too.
Bloody expensive. And so I'd think of a way. Now, you don't have no regulations. You need everything to be regulated. But you just go hammer and tongs, flat out, to get that efficiency in your economy. Now, it's all very well for me to sit here and spout that off in 2.5 minutes. It's harder to do it in reality, but take a step in that direction.
Let's talk about GST.
Yeah.
Let's talk about that for a second. It's my favourite topic.
Yeah.
One of the things I believe in, because I got my eye on those people over 55 who have got no mortgage, have got money in deposit, got big healthy super funds, and they have a lot of equity in their homes. I got my eye on them. Like when I go to airports these days, it is full of people over 55 or going on holiday.
Yep.
When I go to restaurants, it's full of people over 55 going to a restaurant.
Fancy restaurant, yeah.
It's spending money. They buy the caravans, they buy the new BYD cars, electric cars. They're buying the apartment because like the investment property. They're outbidding all the younger people because they're confident, they feel rich, and I'm thinking, well, what would actually stop them from spending money? Well, I just know that people in that age group actually still read the newspapers, a lot of them. If the front page of the newspaper said recession, those people got brought up in an environment.
Oh, they remember it.
They like remember it,
me, mate.
Yeah, we remember it. And they go, oh shit, hang on, recession better. Let's pull up here a second. Yeah. 1, recession. 2, by the way, the GST is going up. So now, when I go to do my shopping, it's 10% more.
Yeah.
And people, the whole environment of changing the behaviour of a nation in terms of us spending too much, therefore encouraging vendors or merchants to feel as though they can charge us more, which is also their behaviour, is all psychological. So I think, done a survey 1, survey 2, I think that if they were reading the papers constantly, which the newspapers will do these days, and the next thing you know, then as soon as the newspaper will appear everywhere, there's a recession on. There's a recession. So, and by the way, GST has been increased temporarily, just during the recession, just during this period of getting inflation down.
Yeah.
They might say, you know what, darling, we're not going on that caravan trip around Australia. We're not going to buy the caravan. We'll wait.
Yeah.
And we
won't go on the cruise around the Pacific Islands.
Yeah, we'll pull up. And let's not do it. And I think that's what needs to happen. Sorry, Steve, just to get just the one step though, but to get us there, recession, maybe reading a little bit about unemployment, and GST. That's the policy I'd like to see from a fiscal policy point of view. Do it hard and fast. So it happens
and unexpectedly. Scare the pants off people.
Basically. And that way, because I'm hoping the outcome will be a shorter period of stress for everybody. Yeah. The last thing I want to see is this Reserve Bank try this experiment again and elongate the period that they put mortgage holders out.
What you've proposed, if I can go back to about 10 minutes ago when we were having our conversation of the rate monetary policy, both up and down with interest rates affecting a very small part of the Australian population. A GST hike affects everybody.
Yep, that's what I'm saying.
It is the rich person who buys a bottle of Grange for $1,000. They pay an extra $100.
Then they won't do it.
The little old lady who buys little old man who buys a cheap bottle of red for $10 and he pays $1
Yeah.
on a 10% extra.
But if he's doing it every week, he's going to think about
it. But it impacts everybody. Unlike a mortgage, I don't have a mortgage. I don't care if they hike rates. Hike the GST, well, everybody buys groceries, insurance, the
shoes, T-shirts,
everything,
cars, and
food,
you know what?
Included on food. That was one mistake. It's not in hindsight maybe that Costello made. Like Keating made mistakes. They all make mistakes, and I'm not picking on him for that. Far from it. Was to exclude food.
I think it should be included. Everything should be included. So, and there's one more thing I want to say about that. If I increase the GST, I would only increase the GST for a period of time. So it's got a bottom of 10%, and it's got a top of 11% for argument's sake, wherever it is.
Whatever. Yep.
But it never goes below and never goes above a certain number. But you know what's interesting about that? If you are in that category of people who are happy to earn higher interest rates, or you've got no stress whatsoever, the money you don't spend, you are now saving. Now,
that's right.
Our savings environment starts to load up. In other words, which is very healthy. Then the banks have got more money to lend. Now, the banks then will get pressured because what happens in the banking environment, the last thing a bank wants is what they call negative carry. So I'm paying you, Stephen, who's increasing the amount of money you're now not
putting an extra $100 a week into my deposit.
You're not spending it. It's going into your deposit, and we cover this across Australia, every person. The amount of savings increases. I'm the bank. I'm paying you 5%. I've got to lend that out pretty quick. Or I've pretty quickly got to hope that I will be only paying you 4.5% so I can lend it out at 5.5%. Because if I can't find people to lend it to, because the interest rates assessment process, in that assessment process, the interest rate's too high for people to qualify, I've got negative carry. Me, the bank, I've got negative carry. So I'm actually thinking about, I might have to drop my margin a little bit here to get this money out of my book.
Yeah.
And that's actually healthy too.
It is. It's competitive too.
Yeah.
Actually, the other thing about productivity and all those other things is competition policy. It's good to have competition between the banks and other financial institutions. It's good to have competition. Well, some parts of the Australian economy have very poor competition, like supermarkets and those insurance airlines. Love Qantas.
Insurance.
And there's only really Virgin, and they're only not quite as prominent, I suppose, is the word, as Virgin for domestic flying anyway. So one of those things, again, that GST and a variable GST. So in a sense, you can put it in
a variable portion,
and you can see light at the end of the tunnel if you're a consumer and you're paying that goes from 10 to 12%, whatever that number happens to be. And we're going to put it in until 30 June 2028, whatever that date is. Oh, okay, I can understand. And the Australian population aren't stupid. They can sort of see why that is a good idea. They can understand that is better than a rate hike. Because if you've got a rate hike on a mortgage, you can't avoid it. If you've got a hike in the GST...
that affects everyone.
And it affects everybody, but you say, well, hang on, instead of eating my restaurant meal and I pay GST on my restaurant meal, I'm going to cook at home. Yeah. You're tax dodger if you cook at home.
Yeah.
You're avoiding tax. You're not really a tax dodger, but so instead of paying your friendly restaurant $100 for a couple of plates of food with 12% GST, say, look, I'm going to try to cook this new recipe that I found in this recipe.
Well, the GST,
and you pay surely pay GST on the raw ingredients, but as we know, that's a fraction of the cost of a restaurant meal.
And the restaurants will complain, but then I would say to the restaurants, okay, well, you better start working out a cheaper cut of food to deliver to your customer.
Yeah,
so
correct.
If people don't want to pay $100, but they might be happy to pay $70 or $80,
and have a nice night out,
whatever. Then you change your menu.
Correct.
Please adjust because that's how we've all got to adjust. That means everybody's got to adjust across the board. I mean, and by the way, when the Treasurer says, well, we won't get any of that money, the federal government, because it all goes to the states. I'd be saying, well, okay, well, that's great. And we'd be saying to the states, the states who qualify to get more of this extra bit are the ones who can put a cap on their spending.
Oh, indeed.
On their own infrastructure spending. Because a lot of this is coming from the states, Steve. It's not
just
a lot of this inflation.
We're bagging the federal government, but a lot of it's state government.
More of it. More money is coming out of states. Because, every state Labor Party is spending like crazy, and a lot less so much in New South Wales, but we're still spending a lot in New South Wales. We're trying to pull back, but because we set up these bloody infrastructure things that were happening back in to 2020.
Yeah,
and we thought
7 years ago.
and they're still going. Because the unions are just stretching them out, and there's all sorts of
thankfully,
issues.
things like the Sydney Airport and a lot of the metro tunnels, they've all finished in the last year, or about to be finished in the next year or last year.
But that's not the case in West Australian Victoria, or particularly Victoria.
There's some problems going on there, and that can be you're quite right, the extra GST under the current laws has to go to the state and territory governments. Change the law.
Change the rules.
Say, we'll give you this extra money for now. We'll take it off other funding that we give you, because GST is not the only source of revenue for
the states.
Yeah.
The land tax.
Say, here's an extra $1 billion, New South Wales, but we're not going to give you that $1 billion for a special person payment. So we're going to keep that ourselves, the federal government. So in a sense, that doesn't worry me, because that's just sort of shuffling money between state and federal. Fine, absolutely fine. But the macroeconomic effect of a higher consumption tax is less consumption. If the price signals, we're going back to this basic economics 101. If the price of something goes up and your income stays the same, you buy less of it. Simple. If the price of something goes down, you buy more of it. And so if you put up the price of goods and services because the GST goes up, consumption will fall. Yes, the economy will weaken. Yes, your restaurant owner and a couple of shopkeepers might think, damn it, that's really hurting my business. But what that means for them is that they don't put up their prices. They may even cut them to attract
more
customers
business
back. So instead of 100, charge 90. Or Monday, Tuesday nights, we'll give it to you for 80 bucks.
Or change your inputs.
And so that is how inflation comes down.
Yeah, and
it's sort of like how it comes down.
And that's the sort of fiscal policy. Be great if we could.
If we're not going to see it. Look, it's politically. Look, you've got to get agreement. It's got to go through the parliament. I'm sure there are other bells and whistles that we haven't thought of. Like similar to the money going to the states and like. However, just because it's hard doesn't mean you don't try it.
But
economics is hard. Like governing a country or a state is bloody hard.
Yeah.
It's not easy. And people like to bag politicians. I do a bit, but I do give them a degree of flexibility. Like in the pandemic, when Josh Frydenberg was trying to frame a budget and spending money, and what a hell of a job that was. And what he did was, I'd give him 9.5 out of 10. On hindsight, maybe he shouldn't have done this, but at the time we were frightened about what would happen, And when Keating was cutting spending in the 80s, oh, mate, you're being really tough on these poor people. But that's the difficulty of governing. It's hard work. And you've got to make the courageous decisions. And you've got to have a good salesperson. One thing that Keating was very good at was explaining it to
Jim's a good salesperson.
Jim's a good salesperson, and Costello was a good salesperson.
Yeah, they're good.
He was in the media every day or every week when they were implementing the GST and doing all these other things. They were there explaining it to the current affairs and 7:30 report and bloody radio, whatever, morning breakfast. They were there talking to the people who, preparing the kids' lunches at home in the morning. There's TV. Oh, there's the tree. Bits of it got through, and it came to this point where, for Keating in particular, but also to some extent Costello, but Keating in particular, when they were asked, do you like Paul Keating? No, don't like him at all. Do you respect him? Yes, I respect him. I'm going to vote for him. I don't like him, but I'm going to vote for him because I can see that his strategy's in the right place. And if Jim Chalmers or an alternative treasurer can sort of say, this is what we're doing, and explain to the people, yep, we're going to have some tough love. We're going to put up the GST. We're going to cut NDIS funding. We're going to cut some other care services for a couple of years because we've got to get rid of this inflation problem. Remember, we've got to circle back. This is all about inflation back to 2.5%. That's why we're talking this, very unpalatable decisions. I wouldn't want to take money away from people.
I don't want anyone to lose their job either.
No, I don't want people to lose a job. I don't want to, but you've got to get that inflation rate down because that is becoming worse than I feared.
Yeah, and I think
worse than even we feared, I dare say.
I think that's right. And I think it's like now we're becoming, like generally speaking, the money markets and everyone's talking about it. Like even Lucy Ellis, she came out like 3 weeks ago, Lucy came out and changed her whole, or the Westpac, as the chief economist at Westpac, she changed the whole Westpac view, and now she's talking about at least 2, maybe 3 rate rises. Yeah. She was talking about 1 in May. Now I think maybe 2 weeks ago they dropped this one to the marketplace.
Yes, a couple of
and
complete revamp of what they're fair enough. The world's changed. Yep.
Correct, and it has changed.
Yep.
And I just wonder whether our government's prepared to do the same thing. Let's just talk about the Reserve Bank governor for a moment. I guess this is the most pressure she's ever been under.
Yeah.
Do you think that I'm hearing that the bureaucrats were calling for rate increases a while ago, and more of them in larger amounts. Do you think that the Reserve Bank board? I know it was 5-4 last time, and I dare say the 4 who were not in favour of the rate increase at that meeting would now sort of be thinking to themselves, well, it turned out to be right.
Thank goodness.
Thank goodness we did.
Yeah, no, agree,
do you think there's going to be many doves still in the RBA board after this?
I think there are fewer. And as I was saying before, the numbers, we haven't had a whole lot of information yet.
We get it today, tomorrow.
Tomorrow we get the next inflation number for March.
Yeah.
And the March quarter.
And March quarter, but also the year to
But
March.
we've not had retail sales. We've not had building approvals. But we haven't had the things that are going to be impacted over. And it's not just 1 month either. It's going to be a few months. But I dare say the things that we do have partial survey data, I mentioned these before, consumer and business confidence, down the gurgler. Mark, one thing, you know that the latest consumer sentiment number.
It's the worst.
We were more optimistic at the worst point of the pandemic.
Yeah.
We're more pessimistic now than in the pandemic. And I tell you what, I was pretty pissed off in the pandemic.
Yeah.
The early 90s recession, it's feeling worse for consumers now than in the early 90s recession. It's a 53-year low.
Yeah.
What's that? 79.
Something.
I can't remember what year it is. Yeah. This is the weakest consumers, or the worst, I should say, consumers have felt about the economy. And so if I was a dove on the RBA board, I'd be sort of saying, look, kudos to you guys for calling the rate hike last month in March. And look, we've just got to do it. We've just got to bite the bullet and think, well, here's another rate hike. We're going to watch. And they put the caveats on every time they do it anyway. Yeah, and when the facts change, they change. Fine. Absolutely fine. So we're going to be watching the world economy. We're going to be watching petrol prices. We're going to be watching housing cycles. We're going to be watching wages growth. We're going to be watching NAIRU and the unemployment rate. We're going to watch the budget in next week, whenever. So they can be honest and say, well, here it is, and we thank goodness we've got a few very hawkish people on that monetary policy board.
Do you think the RBA governor? Where do you think she sits in all this?
Oh, look,
I know they don't disclose the 5-4, but where do you think she sits?
I think now she hates this inflation rate. Andrew Hauser, the deputy governor, her deputy, he was in.
He's very good, by the way.
Yeah, he is. He was in Washington or New York, I think, a couple of weeks ago for IMF meetings, and he gave a fireside chat, which is a not formal speech, I think is how they define it nowadays. But he said this is the worst nightmare, quote, nightmare that a central bank can have: high inflation and rising unemployment.
Wow.
It's a nightmare. Now, so we all wake up with nightmares occasionally and think, oh, God, that was pretty spooky. They're living it. And again, you don't bury your head under the doona. You bring it out and say, what the hell am I going to do?
Well, if
they do nothing, look, doing nothing.
Oh, no, they can't do nothing.
I think we're at the point where they can't do nothing. They have to hike.
What if they went 50? They just said one good whack.
And here we go, guys. This is not a knife. This is a knife. The good old Paul Hogan thing. I can't see it, but boy, they've surprised the markets quite a few times in the last 12 months.
What about if the inflation number tomorrow?
I can't remember our price. They didn't do it. Remember last year? Anyway, whatever. They often surprise.
July last year it was.
Yeah. Oh, we had a cut price.
The July meeting, and they waited for the data to come at the end of July, and they cut in August.
That's right. Correct. Thank you. There you go. That was a shock. They can shock the markets. They can shock us.
Well, there's like a 90% chance in the capital markets of being a rate reduction in July, and they didn't do it.
Yeah.
But by the way, it made sense. Because the only reason I say that is
50. Wow.
Well,
I never say never nowadays.
But Steve, if there was a 5 in front of the inflation number tomorrow, or if there's a high 4
4's on the trimmed mean.
If there's a high 4.
Yeah. That's a big number.
That's nearly double where they want to be.
And don't forget the March quarter. January and February, we hadn't had the price effect. This has only got 1 month of 3 in the March quarter.
And it's got
till we get April, May, and June.
And it's got April, May, and June of 2025 in it as well.
Yes, that's right.
It's got 3 real low months.
Correct, low ones, and they're dropping out of your run rate.
And they drop out at the end of June. So like I don't know. I don't know, but I think it's potentially a go. 50.
I'll never say never. I'm not forecasting it, but look, maybe it's 25 with really hawkish commentary. we're going to go again. We're going to go again. We're going to go again. You know,
Steve, can I just quickly get you to just opine on one thing? You and I talk about data, we talk about numbers, and we talk about, we've got your board here with all your various categories, and let's just boil it down to what it is. The Reserve Bank, let's call it monetary policy, is all about behavioural science. It's about changing the behaviour of a nation, or changing the behaviour of, in our case, part of a nation. It's behavioural science. It's psychology.
It is. And talk of a rate hike can be almost as effective as an actual rate hike. It's that response.
Or it may not work because we've done it to me so many times, not you.
That we haven't followed through.
Yeah.
Oh, they're just talking hot air,
Or it's only going to affect a small part of the economy or the nation. We need to change the behaviour of the whole nation.
Yeah. To get that inflation rate down.
Yes.
To trim spending, to get price expectations down, to get that's the other thing that comes out of that Westpac Consumer Sentiment Survey. They ask people where they expect inflation to be. Now, consumers are pretty bad at forecasting inflation, with all due respect, but that number's gone up to, I think, 6.9%.
Whoa.
One of the highest, again, goes back decades and decades and decades. I think we go back to the early 90s or late 80s to see when consumers were feeling this gloomy about how high inflation was going.
Should we be blaming Paul Keating for this? Because he's made all these people over 55 feel rich. They got a great superannuation.
But we can remember how bad things are.
I know, mate, but I'm just saying, by the way, I'm being smart-ass, but our superannuation guarantee is the envy of the world.
Oh, it's a good policy, correct? Oh, don't get me wrong.
It's the envy of the world, and not just from the point of view of the individual who's going to have good super, but from government policy point of view. Governments don't have to be funding your retirement.
Not going to be funding mine,
because it's a massive national liability.
Yes,
especially in America, a place like that.
Yep. The fiscal cliff and all those things they talk. 401k cliff, which is
massive national government liability.
So it's a good thing, but then again, it doesn't mean you don't analyse it.
Yeah.
When you look at the effects on the economy today.
So
that's a good policy. Great. Yeah. However, there are consequences for having it.
And the consequence is there is a smaller, and as we have an ageing population, which probably no one expected, but they've tried to fix it up with immigration, but hasn't quite worked. But the ageing population is still growing. People are still retiring, and they're retiring with money.
And we're living longer too, Mark, which I think is a good thing.
That's great. We are now living longer as well. But what you and I think our conclusion is, government, it's not just a matter of trimming the expenditure in the budget. We need some serious thought about how we're going to solve this for the future. And Reserve Bank, you might have to go hard and fast.
That's the dilemma for the next couple of weeks. RBA on the afternoon of the 5th of May, and on the 12th of May, the evening, 7:30, Canberra time, the Treasurer gives the budget. This
will go down in our memory as one of the great periods of the Australian economy, and in terms of conundrums.
This is a rare. It doesn't happen very often.
No.
This is a rare event.
There's a proper blue moon.
Rising inflation, like really big rise in inflation, and a really weak economy. That doesn't happen very often. The last time it really happened was in the 70s.
It was and by the way, it was off the back of an oil shock.
Correct. 100%.
And our mate, old Goff, he was the PM. Well, for a little while.
Yeah.
Not for
a few of the years.
Yeah, a couple of years, yeah. but it was an oil shock.
It was an oil shock, yes. Yeah. The OPEC countries got together and said, why are we selling this oil? At the time, there was like $1 a barrel. Yeah. They put it up to like $10 a barrel, and the world went, oh, my God, this is catastrophic. By the way, and it was.
I've seen analysis on that pricing relative to today's price. In other words, adjusted for a whole lot of things. And it's equivalent to about $170 a barrel today. Yeah. So it was significantly much more relatively.
100 odd.
Yeah, relatively speaking. Yeah. And if you remember, there was the Iran war that happened in 78 or 79.
Correct.
Where there was another oil shock.
Yes. It was a continual rolling.
Yeah, and that rolled into the 82 recession.
We had years of
82 recession. And I remember, by the way, we're just talking about, I did raise one thing. I just want one more thing before we go over to your board, is I do remember, I think it was Simon Crean. He was treasurer.
Yeah.
I can't remember which period Frank Crean was, but anyway, Simon, pretty sure it was Simon. In the mid-'80s, he introduced a tax rebate. So a rebated tax that you got after you lodged your tax return.
Yeah.
And it was means tested, and it was up to $1,200 for any Australian who had a mortgage and you got a tax rebate of up to $1,200 of the amount of interest you paid for that year on your mortgage. So you went to your bank, found out what was your interest element of your repayments, and then you could make a claim in your tax return. I think it was 86. I think it was 85 or 86. And and the government would pay you back $1,200, but you had to be means tested. In other words, your salary had to be below a certain amount. And I was one of those people. I qualified because it was my early days. And I remember thinking to myself, I actually thought to myself at the time, bloody hell, that's good stuff. It helps me. Yeah. It was a huge help to me.
Oh, yeah. Getting through an incredibly difficult time.
I had kids, the whole thing. I just wonder whether or not some thought could be given to a means-tested rebate of tax. I know it's money out of revenue, but a rebate of tax to those people who are genuinely struggling with the cost of living.
All these things should be on the table. All of these things should be being discussed. Hopefully they have been discussed. What we see on budget night, hey,
who knows?
We'll see in a couple of weeks.
I'm quite nervous about it. Okay, let's look at your board.
Right, the board, the old checklist. So the RBA, when they're meeting next week, GDP, neutral to tightening. GDP growth is accelerating. We haven't had the December quarter numbers. They come out in a month's time, but GDP numbers are pretty good. Inflation, I'd actually put it right off the chart. That is tightening. If that was the only thing on this board, you would hike 50, maybe more.
Yeah.
Labour market, I'm moving, following our discussion, towards the tightening, job growth, and linked to that wages. I mentioned the SEEK wages numbers which came through just recently. Wages growth are picking up, and to the extent that there is a flow through of wages to final prices.
By the way, it doesn't always follow.
It doesn't always follow. No, correct. In fact, it doesn't always follow. Yeah. But right now, if inflation was 2% and we're getting wages growth picking up from 3.5 to 4.5, hey, fine, that's fine. We've got inflation 4 or more, whatever, and it's accelerating. That's the problem. International economy, I'm going to put tightening. It's a global oil shock.
Well, Mary's killing it, by the way.
Yeah, and America's strong, and it's just this inflation rate around the world that's a big problem. House prices, well, they're weakening in Sydney and Melbourne. I'm just putting that neutral. RBA doesn't target house prices, but we'll put that in neutral.
Well, it does affect the wealth effector. It does have
it does have a wealth effect, So if you're feeling rich, you tend to spend. If prices drop and you're feeling less rich, you tend to hold back. So just neutral.
Yep.
That's fine. Retail sales or household spending, I'm putting in neutral. It's slowed a bit. Not a crash, so don't need to ease. Not a hike, clearly. Consumer sentiment, negative. Lowest in 53 years.
We're going to get brain damage out of this, by the way.
And I'm just going to put business confidence, so I'm going to jump to.
We're going to get brain damage out of this because we're tightening and easing.
Building approvals, nice and strong. They lifted last time. We want more houses, so I'm not going to hike rates just because we've got a few buildings being done. Business investment, data centres, warehouses, hotels. We've got a shortage of hotels. They're all starting to be built. Neutral, that's nice. I want to say, in fact, that's one. Dwelling approvals and business investment are two positives in the economy right now. So we might have sounded a bit gloomy, and we are, or I am. But there are two parts that are actually hanging in okay.
For the moment.
For the moment. Commodity prices rocketing higher, erring on the side. Yeah, we're a beneficiary. Australia is a beneficiary of high commodity prices, even though petrol's a big negative for us. Stock market, record highs. Again, like housing, RBA and the Fed don't target stock prices, but record highs.
Again, it affects the wealth effect. It affects the wealth effect.
The wealth effect, yes. If I'm making money on my super, I'm going to spend it, as you've been going on about, and you're 110% correct. Current rates, I'm just going to put that as neutral. Previously I had that more towards easing, but I think a 4.35 or a 4.6.
Well, we don't know what neutral is anymore.
So I'll put that one into the too hard basket. But the thing about this board is, as we've said time and time again, the further up the board you get, the more important these issues are. The most important issue, inflation, it is the killer. Labour market's tight. GDP's erring on the side of being pretty strong. International economic conditions, you just have to, these things are fine. And as I said, thank goodness we've got a little bit of a positivity in a couple of parts of the economy, because if every component was negative, we'd be in recession already.
Yeah.
So thankfully a few things are keeping our head above water for now. We'll see where we are in 6 weeks' time when we come back, and that's after the GDP numbers come out. But that's it. You'd say, RBA board, have a look at our monetary policy checklist. This, plus even where these other ones are, even the ones that are neutral, just hike, just do it.
Okay, what do you think the inflation numbers are going to come out tomorrow?
Headline will be about 4.7. The trimmed mean will be a bit less because they trim out the petrol price.
Just for petrol, not the effect of petrol.
Not the second round effect, no. So not the transport cost of getting your goods to the supermarket. No, just petrol, what you and I fill up our tank with. So about 4.7 for the annual headline figure. Because you take out petrol, it's going to be about 3.5.
Well, there's a lot of weight on petrol then, is there?
There's a lot of weight. There's a couple of other things that are in there because international, some business travel costs have also, that's petrol.
Yeah.
That's other things too, but petrol. So it's going to be about 3.5 because they trim out the oil shock and a couple of other things that have been seasonal in that particular quarter. Remembering it's the March quarter, a lot of prices go up on the 1st of January. Things like school fees.
Yeah.
The way that the Bureau of Statistics are calculated anyway.
Yep.
It's 1st of January, March quarter.
Yeah.
A lot of those things are included in that. So high headline inflation, really high headline inflation.
Higher trim.
High trim. Remember the target's 2.5, we're at 3.5.
Yeah.
If we get numbers, as you said, near a 5 for the headline, and I'm not going to rule it out, and a number heading towards 4 for the trimmed mean, well, maybe your scenario for a 50 comes into play. As I said, I'm not going to say it yet. I'll let you say it. But, yeah, you'd say that the board just has to go next week. Hike that.
How many more hikes? I know that's crystal ball stuff, but where do you think we're heading?
I am worried about the growth outlook. That's why I don't necessarily think that.
Which way? You mean we're growing well?
Too weak. We're going to weakening.
So it's going to come back this way.
That way relatively quickly because of these sentiment numbers.
Yeah.
And because the RBA has the dual mandate.
Yeah.
You know, if they hike 2 more times, say, in the next 2 meetings, or this meeting and maybe the one after.
But there's a June meeting, isn't it?
The economy will be very, very weak by the time we get to September, October, November. And I think they'll be saying, look, the weakening economy, and look, and I can't forecast oil prices. You know, who knows what's happening in the Middle East and Iran, Trump, Israel fighting, all this sort of stuff. I don't know. The Straits of Hormuz. But I'd like to think we get some sort of resolution by the latter part of this year. And the oil price might be at $80, $70 a barrel. The petrol price will be coming off a bit. And I think the RBA will say, well, look, we've done it. We've had our tough love. And we can afford to. No, I'm not talking rate cuts. No, but I'm just saying we top out at that high 4s.
But we might also have the other side of the issue because don't forget, before the oil crisis, we were looking at 3.8 headline and 3.3 or 4
indeed
trimmed, and that was enough to put rates up.
Correct.
And we go back to the old problem we had before. If there's a third of the population have money on deposit, I think that's what's stoking that number. And I don't know whether one interest rate rise, irrespective of what petrol does or oil price does, I don't think another interest rate rise will be enough to bring it back to where it needs to be. And there's this disproportionate game being played between money on deposit and between money borrowed. And I can't reconcile it in my mind where it sits. I just feel like we need a third player. We need something else to dissuade those people who are feeling rich, because they're not going to stop spending if they don't have to.
Correct.
You got to make them. You got to have to make them feel like you got to stop spending, and they're not going to do it just because you ask them or beg them or whatever.
No.
Because they say, like people over that age, they say, "I've worked hard all my life. I pay my taxes. I pay my mortgage. I deserve a holiday,
yeah.
Or I deserve to go to the restaurant and spend $60 on a bottle of wine, or for my wife's anniversary or her birthday or my kid's 21st, whatever."
Yep.
That's
only natural. And I think that how you change that sentiment might be tax rules.
Yeah.
Tax and government spending.
On super, maybe.
On super, so they do something.
Or tax on government spending.
Be a big night on the 12th of May watching that. What on earth is in that budget? They've flown so many possibilities.
God. Yeah, I know.
Some of them will be there, but which ones? I don't know.
Yeah, it's crazy too, because I keep wondering how they've structured this budget. It's like they put themselves in a position, well, shit, we can't have that one in there because the response to that when we put that through the AFR the other day was dreadful. Let's take that out. But all of a sudden there's a gap.
Yeah.
Like it's like there must be like some sort of game of chess.
Yeah.
Maybe they're using AI.
No idea.
No idea. Thanks, Googie. We'll talk soon,
Thanks,
mate.
Mark. Cheers.